The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
Well, joining us now here on the program, we wanted to dive into the latest milk production report, the dairy markets in general, as we near the end of 2023. Talk a little bit about livestock as a whole, especially that cattle market. Here for a conversation today, we are pleased to have with us Robin Schmahl with AgDairy, a division of JSA and agmarket.net. Robin, always good to talk with you. It's been a while, but thanks so much for joining us on the program today. I hope you're doing well.
Yeah, doing well, and thank you for inviting me to come on.
Well, Robin, let's start with the latest milk production reports. I know those numbers coming out here just a few days ago. November milk production shows it was down 0.5%, and I'm just wondering your thoughts on that top line headline that I saw there. Overall, as you look at the latest milk production report, what stands out to you as some of the key factors? Let's start there.
Well, I think some of the key factors would be the cow numbers of the decline from October to November. We were down 10,000 head in the U.S., and that's a sizable number that we haven't seen again for a while. Stands to reason based on our lower prices that we're looking at again, but yet that's probably, we have to see more of that really in order to get support under this market. The down 0.5% in the 24 states, 0.6 in the U.S. really is not a big issue off of this report. So you can view this report as a little friendly. But the interesting thing when we're breaking down the numbers a little bit is it's the lowest cow numbers that we've had since June of 2020.
Wow.
But then the lowest milk production, monthly milk production, only is back to February of this year. So we have seen the strength in the production per cow, but the production per cow is the lowest since November 2021. So we have been seeing stronger production per cow, making up for some of the decrease in the overall herd. So that's why partially why we're not seeing the strength that we might have seen or we did see based on how the market was moving at the end of 2021, which got real concern over a tight milk market.
Well, I think about those numbers and interesting points you bring up, thinking about the tight milk number and some of those lowest numbers since 2020. And I look at this dairy market in general here towards the end of the year, Robin, and we've seen our fair share of volatility throughout Class 3 milk futures, throughout cheese prices, butter, etc. Talk to me a little bit about this trade overall here as we near the end of the year. Can we expect this volatility to continue, do you think? What are you looking at right now?
Yeah, I think we'll see volatility, but I think it's going to be muted relative to what we did see, especially in the butter market. Butter has been climbing a little bit lately, but you have some fill-in buying. They come in a little more aggressively. Once that fill-in buying is satisfied, the price drops back again. Cheese has been struggling a little bit more. I think we're going to see the volatility, but it's going to be a muted volatility relative to what we had because for one reason, especially in the cheese side of it, manufacturers are not holding on to cheese. They want to move this product. They don't want to pay storage on it. They want to move this product through the end of the year. So they're not banking on, maybe we're going to see a surge in demand. Maybe we're going to be able to get another 20 cents pound or so out of this cheese in the next month. They're not looking at it that way. The overall attitude is really not positive, at least for the foreseeable future. But they're moving it, and demand has been good, but not good enough. And the real impact, probably overall, that we've seen is just the slower exports. So through the end of the year, I don't think we're going to see a whole lot of trend being developed any way or the other. And then we move into the first part of the year, which normally is a slower demand period. Some inventories start to be built. And we're going to end the year potentially with inventory similar to the end of last year. So there's just not a lot underneath that market to get traders excited right now.
Oh, good thoughts there. Thinking about that, and I'm glad you brought up getting into next year, because I think we could segue our conversation a little bit to, what's it going to take to rebuild this cow herd? I think on the cattle side, the beef side, what's it going to take to rebuild our beef herds as well? As we got very low numbers on that side of the equation. What are your thoughts there? I mean, what are we looking at in terms of starting to maybe rebuild our cow herd and for dairy and our beef herd in general as we get into next year? Is it going to take a while, Robin? What do you think?
Yeah, I think it's going to take a while. I think we've come off the high prices in the beef herd, and there was a real push there to try to somewhat, well, I shouldn't say maybe a real push to somewhat, increase potential for cow numbers, because with the high prices, there were a lot of these females that were getting slaughtered. So even with the decrease we've had in the drought situation on the beef herd, I mean, we're really looking at a slow rebuild potentially, and it's probably going to take more than this next year to do that. But along with that, we can't get too bullish. And what I mean by bullish is that we're going to move back up to $200, or anything, because it's the demand driven. And that's where we are right now. And when we've looked at box beef prices over the last few months, they've actually been trending lower. So that's an indication of a little bit slower demand. Part of that because of the higher interest rates, maybe a little bit less disposable income, change in eating habits, maybe a little bit lower restaurant traffic, which we hear that back and forth, and some of that depends on the location. And then, so that's going to take a while. But like I tell some of my customers and stuff is when they ask about, well, how come prices are so low? Because cow numbers are tight. And I, tongue in cheek, I said, well, if there's only one cow left in the country and nobody wants it, the price is too high. But I'm not going to that extent. But I think we're going to find a balance in here. And I think we might see some stronger beef prices as we move along here. But revisiting the highs we had before, I think is going to be very difficult to achieve. And we're looking over on the dairy side. It's going to be interesting rebuilding that herd, because we've had a large push for beef on dairy because of the high prices. And what I'm hearing from customers and other dairy farmers out there that have done some expansion or whatever, heifer supplies are tight and they're higher priced. And I think that's a result of this more of a push to beef on dairy. And that's not going to change anytime real soon. So I think on our biannual inventory report we're going to have at the end of January, we're going to see tighter heifer numbers, the ratio to dairy cattle, like we saw in the July report, where we saw like the lowest ratio of heifers to cows, I believe, I don't have it in front of me now, but I believe since like 2003. And I think part of that is because of that, because we did have sex semen. And when the sex semen came on board, all of a sudden we had a lot of heifers and we had lower prices. And now with the beef on dairy, the lower producers in the herd or less productive cows, let's say, or less genetically good cows have been bred to the beef on dairy. And I think we're going to start seeing, and this is just maybe a bigger term thing, that we're going to see more of the beef on dairy coming into the market, with the market going down or lower like it is now. And then there's going to be a slow switch back again to doing more of the breeding for with the sex semen to get heifers, and we're going to go through that cycle again, which that eventually could tighten up cow numbers, tighten up milk supply, which then would put us to higher prices.
We are having a conversation today with Robin Schmahl from AgDairy, division of JSA, agmarket.net. And Robin, I'm glad you brought up beef on dairy to kind of tag on to what you were saying about that. Is some of the reasoning for beef on dairy becoming a very hot topic right now, very popular? Because I've been hearing a lot about this the last few months here of the year. Is it just to help increase some of our versatility on our operation at this point in time, just as we look at the current price environment, high interest rates, et cetera, trying to get the most out of our herd? Is that part of the reasoning, do you think, behind the push here for beef on dairy, is just to increase our overall versatility in our operation?
Well, I don't know if it's versatility basis basic just income.
Sure.
Instead of selling a Holstein bull calf for $100 or $150, they can do a beef on dairy for $500. And that's what's been going on. So it's more of driven by, I need to make some or have some cash flow on my operation. I don't think it's so much versatility. That would be if they would raise these up to feeders or fat cattle and selling, but they're doing that and they're selling these as calves, and they can increase their income quite a bit more. And that's really the push behind it.
Okay. All right. Let's transition here a little bit. I think too, with the case of this feeder market and largely cattle and dairy in general, looking at feed costs as we get into next year. I know we got a corn market that's somewhat depressed here, down into the $4.50 to $5 range. Maybe other grains have made it into the feed bunk, so to speak. What's your thoughts for some of the folks out there as they're looking at their feed costs as we move here through the rest of the year and into next year? Any notes there, Robin?
Yeah, I think it's good to see as far as purchased feed. We have been seeing that price come down a little bit. I do impress on people not to become complacent, because always when we're looking at, the potential that, this is going to continue to move down, something throws a wrench in the works. And when you're seeing, soybean meal below $400 a ton, you're seeing corn where it is right now. The best thing I think for producers to do is either they can do some contracting with their local co-ops, their elevators, to make sure they've got that covered. Or you're going to the board and just buying some options, because we want to leave some flexibility to take the lower price, but we just do not need to get into the position where all of a sudden feed prices would go higher, especially maybe led by Brazil if they continue to see dryness and they keep reducing some of their expectations for their soybean and corn crop. We haven't seen it yet. It hasn't really pushed into the market, a little bit too early. But if it continues and gets to that point, we could see this market adjust quite significantly. And then with the lower milk prices, it's not a good situation. And as far as it's the same thing goes for the beef people. I mean, we have to provide some protection, but do it with some flexibility.
Well, Robin, thinking about risk management, of course, figuring out your feed costs and more, that's all part of the overall plan. What's your thoughts for folks as they manage their risk here moving into 2024 on the beef side, on the dairy side? Just general thoughts here. Anything you would say to folks as they're thinking about things and kind of putting pencil to paper here the next few weeks, pen to paper maybe in some instances? What would you say to folks about their risk management right now?
Well, on the beef side, we got to look at if you purchase some feeder cattle. Of course, if you purchase them earlier and didn't do anything at a higher price, then you just basically got to hope that we get a little bit of a bounce here. But when you purchase these feeder cattle, take a look out and see what we've got as far as futures are concerned. What's going to work. I'm a large proponent of well, options for one, for put options, but I think the livestock risk protection insurance is really a great thing as far as the cattle industry is concerned. You can go out there, like now, probably to December or October or November of next year, and you can actually put a livestock risk protection policy in place for a certain amount of head, and it's a floor. It's a floor. You got yourself covered. If we go higher, great. On the dairy side, something similar, dairy revenue protection insurance. And as far as I've been doing a lot of put option spreads. You buy one at the money, sell one $1.25 lower, provides a limited downside protection, but it does provide downside protection. But mainly looking at risk management, I think on the dairy side, the livestock side, do a strategy that's going to allow you to leave some upside open. You don't want to lock yourself in right now because with volatility, with a change in market, emotion, markets can be driven substantially by emotion for a period of time. And I can just look back at the butter market, the emotion that came into that butter market, in what was it, like August, and where it drove it to October to a record high, even when we didn't have the concern we had in 2020 of a tight milk market. This was just a leapfrog effect of buyers buying on the what if. And that's what we need to guard against.
Very good thoughts. Very good thoughts, Robin. Before we let you go, too, I'll throw this at you because I know you do keep an eye on the hog market too. We're not milking hogs or anything, but you do keep an eye on that side of the livestock sector. Hogs have been pretty tough. Really, it feels like all year long in 2023. Any notes or any thoughts for our hog producers out there as they kind of take a look at that market as a whole and assess things for 2024?
That's a difficult one. The market's been really rough, and when we're looking at the cash prices, down below $50, and we haven't seen the solid support coming off of the cutouts. It's just tough, and packers have not had to be aggressive because the hogs are there. Now, we'd like to see some of the export interest pick up. I thought maybe we would a little bit more with these lower prices, but that really has not taken a hold right now. We need to see the demand pick up, which hopefully lower prices will do that. But we need to see numbers decrease so that packers have to be a little more aggressive trying to pull some of those forward, or weights decline. Last week we were looking at weights, what was it, 4.5 pounds higher than a year ago. It's that's a lot of tonnage there when they buy in some of that stuff. So we need to see that stuff decrease, which if we see it decrease, maybe we're pulling hogs forward, which might indicate that we're starting to tighten up supply a little bit. But it's going to be tough. I think the hog market's going to be a little bit tougher, maybe to see some higher prices versus cattle or dairy, even though dairy is low. As we move into the next year, it's going to take a little while in order to turn that thing to find some aggressive buying, aggressive movement, aggressive retail demand to provide some support.
Well, I'll do the best I can to support the hog market. Go buy more bacon. That's going to be my initiative for 2024. Robin, right. Great thoughts. Before we wrap it up today, is there anything else you would want to mention or reiterate to our livestock folks listening in here today?
No, not really. I think it's just look for opportunities and carry on.
Definitely. Well, that's a good way to wrap it up. Robin Schmahl with AgDairy, a division of JSA and agmarket.net. Really appreciate the time. Merry Christmas, Happy New Year to you and yours, and we'll look forward to a conversation again in 2024. Thanks so much.
All right. Same to you. Thank you.